My name is Mike Sullivan. I'm a former IRS agent and teaching instructor with the Internal Revenue Service, and I welcome to my YouTube channel. This is the home of the 5 minute or less video. I like to give you the information you need. I don't do a lot of promotion or any of that. The only promotion I do is I say we're available for excellent representation or consultation. You can call us if you need us. Today I want to talk to you about trust fund taxes. By the way, I've worked 10,000 cases. I am a national expert in resolution matters. I should after 50 years. A lot of people don't know about the trust fund tax, so I want to explain the trust fund tax and how IRS is going to go about collect it. If you owe payroll taxes on your business and you are what IRS deems a responsible person, that is, you signed checks and you kind of ran the business, IRS can go after you for the 6672 penalty or the trust fund recovery penalty. As a former IRS agent, I set up hundreds, if not 1,000, of these trust fund cases for people who owed 941 taxes, and to their surprise, they found out, oh my God, I owe trust fund taxes. What am I going to do? The trust fund tax is simply this. If you look at your 941 form, your payroll tax form, IRS is going to collect or go after the money that was withheld in trust. What is the money withheld in trust? It was all the withholding and 1/2 of the Social Security that was not paid. Okay, the other half, the Social Security that you had to match, and all penalties and interest, 940s, all that goes away. So IRS just wants to collect the money held in trust from the people who in fact were responsible for that tax. So there could be 4 people, they could be 2 people. A former agent like me would go in and make a determination who's responsible. For me, I looked at who signed checks, who ran the company, who hired and fired, who signed the contracts, who was on all bank and financial information, and those people were responsible. Simple, really, to go ahead and set that up. But how is IRS going to go after and collect that money? Very simple. It's just like you owe 1040 taxes. That's exactly what goes ahead and happens. How does that work? IRS will take a financial statement from you, just like they do. The service center will look at a 433F. A revenue officer will look at the 433A, and they're going to collect that money as though you owe any other tax. They're going to look at that financial statement and put you in one of 3 categories. You're either going to be an uncollectible, you're either going to be a part pay agreement, or you can file an offer and compromise. We can talk much more about this if you want to call me and I can give you the details. But IRS is going to send you out 5 notices or billing cycles to collect the money in full. By the time you get the 504 notice and the 1058 letter, at that point you better have a game plan, because if you don't and you get that final notice, IRS will send out a bank and a garnishment levy if you don't respond to the 1058 letter. So anyway, if you need any help, you're welcome to give us a call. But get that initial assessment until IRS sends its last bill out, it'll be about 5 months. Anyway, if this was helpful to you, like to subscribe. I appreciate a subscription. Just hit that bell or whatever it takes. And by the way, I'm happy to do a YouTube for you if you think that you have something cool that everyone wants to know about. And I'm always here for a consultation or representation. All the best.